All right, guys, thanks for joining us today. Obviously, we just ran our first Epoch. Those happen on the 1st and 15th of each month. This month, over the last Epoch period, we were negative. So, unfortunately, there's no payout. We'll show you kind of how that works. But obviously, you guys know a couple of days ago, we experienced the largest crypto liquidation event in history. Prices tanked. So, we went from 340, 350 all the way down to 61 cents at one point. ETH tanked. Basically, every cryptocurrency tanked. So that was just recently, a couple of days ago, but this is just the month chart. So on the month, you've got SUI down 22%, ETH down 11 and change. You've got Arrow down 33.1%. Just across the board, assets haven't been doing that well. What that means for paca is we have to come in here and plug in our starting treasury, the amount that we're farming. We're down with the market, right? A lot of our assets are held in SUI, some in ETH, a couple other cryptocurrencies. We print Arrow as a reward token. So all the assets that are down are making a significant difference to our total farming TVL. Where the TVL is right now is $3.501 million. We take that against the total obligation of the platform and then run the numbers against everything that we had last week. So we've got what our range is that we're earning. We've got some stuff built in here for people taking early exits. And what that number comes up with is 664 days. So obviously it's added a good handful of days to the completion estimation, but that's just because the TVL is down right now. So if the market turns back around, because we're sitting all in assets, this number will swing up significantly, and that will significantly impact this. So hopefully on this next epoch, we will have seen an increase in the total farming TVL, and the markets are getting back to somewhat normal, and then we'll be able to do that first payout. So we apologize. Let's run through real quick and just show some farming positions. Here's the updated information that we have on Cetus. So I've got the big chunk right here. Lee has some farming assets as well. We're in the middle of doing a bit of a rebalance. As you can see, the stuff that we have on SUI, our ranges start as low as 326. So obviously we were in the middle of all these ranges when the market turned down. So we had a big pullback on the first day, and then the second day the market got obliterated. Again, the largest liquidation event in crypto history. So there's no way anyone could have prepared for that. Even after the first day, we were starting to feel like there may be some cracks in the market. We tried to move out into some cash positions, but the markets were so flooded with orders. Slippage on removing funds and moving funds was so high that we were looking at sometimes like $8,000 in gas. So obviously we're not going to take those big hits, not knowing exactly what the market's going to do. In retrospect, of course, we would have eaten 8,000 and then tried to buy at the bottom. But even when we were trying to buy assets at the bottom, the orders weren't going through. So this is where we're sitting right now. We're sitting 100% on assets. We basically need the market to recover to a point where we can try to figure out if that's where it's going to stick, and then we can adjust the farming ranges, or it'll pop us back in range. So this was even up at 285 yesterday, so now it's down to 271. So we've got a significant drop even from yesterday. So the market's having trouble finding its footing. We're trying to figure out exactly where it's going to go before we make any final decisions, because what's going to happen is, since we're sitting on all assets here, we're going to have to capture that in permanent loss if we decide to re-range. Right now, we're just sitting on the assets. If there's a big surge back in the market because China and the US or whatever get everything figured out, then we would pop back in range. We would not take any impermanent loss, and we could just continue as normal. What's likely going to happen is something in the middle. We should see some sort of market recovery, but I don't know if it's going to go back to the previous levels. A lot of people got really scared in the market. It flushed a lot of liquidity from the market. Anyone who was leveraged on any type of long in any manner on any cryptocurrency on any chain probably got flushed out. The wicks were so significantly large that it's almost unfathomable that they could get that many orders to go through at any one time. If you know anything about the crypto markets, you're understanding how significant this event was. So unfortunately, it hit us right during the first epoch, but it's not the end of the world. We still own all the assets that we owned before. So if we get a market upswing, we'll be good, and we'll be right back into range. If not, what we're going to do is we're going to take a look and see how we can minimize impermanent loss, get back in range. There's a couple ways to do it. We can figure out what range it's now trading in, and we can heavily load it on the SUI side, which is the portion of the LP. It's obviously the asset. So if we heavily load it on the SUI side and lightly load it on the USDC side, as the asset gains in value, we'll get a little more percentage, a little higher percentage of the gain in the asset as it goes up, and then sells itself out over into the stable coin. So if you're familiar with how concentrated liquidity pool farming works, you'll understand what that analogy means. But we would basically heavily load on the asset and then use the stable coin as a smaller position. That way, when it's selling out over time back into the stable coin, that we would get to capture some of that impermanent gain, if you will, and be back in range. So that's what we're working on. We need the full market to recover, really. ETH, Bitcoin, everything you saw, major drawdowns across the board. And that's really what caused the event. All right, so I showed this in a previous video, but once I get the information from the tracker, we plug in all our data, kicks back the estimated days to remaining, and we plug in our current TVL that we're out there farming. Payback percentage stays the same. This is the total liability as of right now. We run the Epoch right now. Since the epoch that we just had is lower than the previous epoch, there's no payment. If we were to pay out some sort of funds in this regard, we would end up further and further behind, and it would stretch out the time for folks to actually get paid back. So the best scenario, the fastest way to get paid back is actually not to pay investors anything until the very end. Obviously, that doesn't make sense for investors. They need some sort of money coming in over time. So we've decided that the payback multiplier percentage, the amount that you're going to get paid back out of what we earn, is 40%. So you get paid along the way, and then toward the end, you'll get that nice big payment lump sum at the end, and the protocol is fully solvent. You guys can do whatever you want with your funds. But that's basically how the math works. So all that stuff has been pushed to your dashboards. We're hoping for a much better scenario this next epoch. So let's hope for some love in the markets. But that's exactly how it worked out. We, over the last month, have seen a significant downswing in the market, and that has significantly affected our epochs and our payouts and our total farming TVL. So we need to sit tight and wait for this bull run to actually come. We're looking at all the cost benefit analysis of trying to figure out whether it makes sense to take some of that impermanent loss, all of that impermanent loss, how we calculate the positions. Do we think there's going to be another dip from here? And would it make sense then to rearrange the positions at all? So we're taking a look at all that stuff right now. We'll give you some more information on that this week, but that's it for the breakdown on how this worked.
Yeah, I just want to echo the thoughts of Scott. Obviously, it's not what we all wanted. That includes us as investors as well. And going back to very simply the sort of crash that happened, I actually watched it live. I was sitting at the computer and tried to cash out ETH at 43.40. I've written in my notebook. And like Scott said, the price impact of me doing that on a pretty small position of $250,000 was close to $13,000. And I even believe if I'd have tried to process that transaction with a gas fee of $800, whatever it was, on top of, the transactions would have failed. And when me and Scott synced within 20 minutes of all that happening, well, 10 minutes actually, we just couldn't get orders to go through, which is super unfortunate because we tried to respond in some positions to move to cash because they weren't down at that time. We were in the middle to the lower end of the range, so we could have acted upon it, but it was carnage. So unfortunately that happened, and the way our system's set up is to protect as much money as it can, which is good for all of us as investors. Of course, we wanted to pay out on the first real epoch, but it is what it is, and there's nothing we can do about the market until it turns around. And be sure in the knowledge that we are looking at the figures and, like Scott said, the benefits of our next move, whether that be, the assets going up and we sort of drop our position at the bottom end. Scott explained that better than I would. But overall, it's just one of those things. The market has been very rough to us all. And, the long positions all got flushed. The market has recovered slightly, but we're seeing little pumps and then, the market's selling off a little bit. So it's a little bit volatile, but that's crypto. So, yeah, we apologize, but we're working as hard as we can to keep moving and ensure that we do the best for all of us. So thanks very much, Scott, for, and the team, obviously, for patience, and the community for looking out for us as well. So thanks very much.
Yeah, well said, Lee. So we'll keep you guys updated, but obviously there's nothing we could do about a flush event like that. It really wrecked a lot of people in the market. We're very happy that we were in positions that couldn't get liquidated, because a lot of people did get liquidated. I mean, some people had just the tiniest bit of leverage on positions. that was so far away that they thought for sure that they were safe, and any normal event they would be. But a lot of assets were cut down by 35% within 10 minutes, and wicked a lot of people out. Even higher. I mean, Sui went down, like I said, from 340 to 61 cents. I mean, that is a major percentage drop, wicked all the way down there. So if you had any type of leverage position or anything, it would have sold you out and killed your position. So we're lucky it wasn't worse. And yeah, while it's unfortunate, it's definitely recoverable. So this is where we're at. Extends the days. Apologize for not having a payout here, but unfortunately, this is the market that we're in. And yeah, I'm sure it really ruined a lot of people. I'm glad we're still in a position to where we have the capital here that we can bounce back with. So anyway, guys, appreciate your time. We'll continue to do update videos like this. And as soon as we figure out exactly how we're going to tweak the positions, we'll kick out some information on it so you guys can break it down. But that's it for this week. Take care.